Welcome to Brave. Be inspired by the best leaders of Southeast Asia tech. Build the future, learn from our past, and stay human in between. I'm Jeremy Au, a VC, founder, and father. Join us for transcripts, analysis, and community at www.jeremyau.com. Hey, Spencer, welcome to the show.
Hey, Jeremy. Thanks for inviting me to the show.
Well, I'm really excited to have you because you're a founder, you've been acquired, you're working in crypto and blockchain, but also you're like a solid guy who's really chill. I really enjoyed hanging out the first time we met. So I'm really excited for people to learn your story as well.
Yeah, it's great to be invited to the show, Jeremy. I think the first time we met was pretty random through one of our mutual friends. Really, really great conversation. I think we've been in touch ever since.
Yeah, I think it was pretty much like, I think Jeffrey, I was asking him about whether I should join On Deck. And then he was like, oh, hey, after this brunch, you can meet Spencer, who's also part of On Deck. And then I was like, okay, I'll just say hi. It was a random conversation. And we ended up having a separate conversation after that, which was a lot of fun right before you headed back out. I'm glad we got to connect randomly, right?
I know, right? I think those are the best kind of like, I guess like meetings. You don't expect it and like everything is like upside, right, from that.
Yeah, I like the phrase. Everything's upside from there, right? It was like, sounds like you hit like a lottery, right? And I was like,
exactly.
Vegas is everything is upside after there, right?
Exactly. The lottery of meeting people, right? The lottery of meeting people.
Serendipity. Yeah. Well, for those who don't know you yet the way I do, could you introduce yourself professionally?
Hi, everyone. I'm Spencer. I'm a senior product manager at Coinbase. Before Coinbase, I was previously the head of business operations and growth at CoinMarketCap. So CoinMarketCap is a cryptocurrency information site. And then I led the acquisition of the company with Binance Group, spent some time on the Binance Group on the leadership team. And then I left in August last year and I joined Coinbase in January this year. At Coinbase, I focus a lot on some of our advanced trading products, basically anything that our retail customers could use but are more advanced. And we try to cater to their needs with our products. I spent the last 4 years in crypto. And before crypto, I spent a lot of time in the AI space and I worked at Twitter as well out of college. So that's a bit about me.
Awesome. And I got to ask, like, when did the entrepreneurial startup bug first bite you?
Yeah, I think it first bite me in 2010, actually. I think when I was in the military, you're not supposed to do anything outside of the military. So I guess like sometime after I ORD'd, I started a business in the events management space. I helped a friend to start an education sort of company. It's actually still around today. And then that's kind of how I first got started. And then when I was in college, I spent a lot of time looking at TechCrunch for one of my classes called Technology and World Change. And that really helped me to just like absorb everything about tech. And then I decided, all right, tech it is. So that was sometime in 2014.
Yeah, I think I was around the same time as well. I was reading a lot of TechCrunch. I think ValueWag was around at that time. And it was just really fascinating to read about all this technology from this place called Silicon Valley.
This magical place, right?
This magical wonderland, right?
Yeah.
For me, I think, of course, I was lucky as I did my undergrad in UC Berkeley. So Silicon Valley wasn't that fantastical. It wasn't too far away. But it was weird because the actual Silicon Valley is nothing like the dream Silicon Valley, right?
Yeah, it's probably more like the parody comedy show Silicon Valley.
Exactly. Because Silicon Valley in your brain, when you first get to know as a kid, I don't know what was it like for you, but for me it was like, well, you reading news is like this verified place where all the founders know each other. They're all at cool parties and all like effortlessly ideas come into your brain. I remember the movie Social Network was exactly how I visualized all of Silicon Valley, right? How about you? What was your imagination of Silicon Valley back then? Do you remember?
Yeah, I think my imagination was probably some of the documentaries I watched before, and then like the movie Social Network. I think that was also like our era, basically, of how we got to know more about tech. And it's kind of interesting because I think before that show, The Social Network, there wasn't any real Hollywood blockbusters or shows that depicted about what Silicon Valley was like. And I think that was probably one of the first shows that we really got to see how it's like, right? Like Sand Hill Road meetings, raising money from VCs, all that kind of stuff. So yeah, I think it's pretty idealistic. And that was that, right? And I think sometime in 2011, I think I went to San Francisco for the first time. And I stepped foot in the Facebook office and I saw like Mark Zuckerberg through like the glass. I'm not sure if that's bulletproof or not, but anyway, he was in a meeting room. And I was like, oh shit, starstruck for a moment.
What's your first impression of Mark Zuckerberg looking at him from the distance through the glass?
He seemed pretty intense as a person, right? He was like, deep in a conversation. I think we found one or two execs in a meeting. He seemed pretty personable. He kind of like, looked and smiled a little bit at, people as they walked past. So yeah, he seemed pretty nice, but intense, definitely.
Yeah, I have the similar feeling. I remember like social network was such an inspiration for me for a time. I'm almost embarrassed to say this, but I actually, I have a vision board around that time. And I actually printed out the business card that Mark Zuckerberg had, which is, I'm CEO,
Oh,
B,
nice.
right?
Nice.
So I printed out that business card and I stuck it to small one and stuck it to my vision board. And it's,
I may have done the same thing. I will not admit it, but I might have done the same thing.
So that means you and I are very similar then. Anyway,
wow.
oh well, who knew that we both theoretically may have done the same thing.
Exactly.
Yeah. Inspired by the same business card for the same movie. Actually, now that I think about it, maybe every founder at that generation also did the same thing as well.
Yeah, you don't remember that many things from the movie, but I think that's definitely one of the things that you remember, right? Like that founder going against like all odds kind of feeling, that feel, I think is what we're really going for, right? It's not so much about the title, the business card. I think it's more about what it symbolizes and the cultural movement behind it.
Yeah, you're right. It's not about the crudity or the vulgarity. It's more about the underdog story, which is like,
Exactly.
hey, you don't care about me, but I know who I am. And here's me just being super blunt about it.
Yeah,
and then
exactly.
take it or leave it kind of dynamic, right? And I think that's a nice thing when you're feeling like being an underdog, especially when you're being a founder in the early days.
Yeah.
So you're 2010 and then you're working on a bunch of different ventures and so forth. And then what's interesting is that you start you work at Singtel, then you work at Twitter. And then after that, you actually found off your first company, right? Called Key Reply. And later on, you become a founder again. But what was that like being your first founder story?
I think the first time I was a tech founder, specifically, was for the company called Key Reply. We started as a company called Graph Paper, actually. My co-founder and the CTO, he won the Facebook hackathon with a product that was basically like a collaborative Canvas tool where you can put in web elements and so on. And then we were like, oh yeah, like being first-time founders, we were like, all right, we have a cool product. Let's try to build a startup out of it. But yeah, I think we failed pretty miserably at product market fit. Couldn't get any sales, couldn't get any customers when we launched after like half a year or a year of like toiling on the product. So that was that. At the time, we had to discover like a pivot of sorts, right? Basically like a redirection change. And we found that, at the time, there was a lot of interest in the enterprise space and, companies for automated chat solutions. And we started looking into that. And that's kind of how we pivoted into Key Reply, where we focus on, AI chatbots as a service for enterprises. And then the company went on to, I guess, we raised funding in the Valley. We lived in San Francisco, in New York, and Hawaii for a bit of time. And then we had customers like Zalora, SingLife, Ninja Van, basically a lot of like customers out of Asia, including the government of Singapore's Ministry of Communications. So the Facebook Messenger chatbot by GovSG was actually developed using our technology. And then we ended up getting the company acquired and sold to new investors. And then I left the company thereafter. So that's a bit about that story. Yeah.
Wow, thanks for sharing about that company and how it went. This is something that happens for a lot of folks, right? They start up a product because it's a hackathon. So they're like, and the judges make some good noises to be like, okay, this is the best team out of 20. And then you're like, oh, that totally means we have product market fit. It's totally going to be $1 billion company, right?
Yeah.
And then you start building out this hackathon product, the equivalent of it, right? And you're just not going anywhere, right? And one of the interesting part that happens there is then you start thinking to yourself, okay, do I keep going because the market is just too dumb? Or do we need to pivot, whatever that means, into something else that we don't really know? Or should we like dissolve as a team, right? And so for you, it sounds like you were able to do that pivot. So tell us more about what advice or how would you think people should be thinking about it from finding product market fit and what to do about it if they're struggling.
There's a saying by one of the YC founders, I forgot which one, it might be Paul Graham or Kevin Hale, whoever. Basically, the definition of a startup is actually you are in a constant search of product market fit. So the product market fit is almost like this elusive thing that people look for. I think even today, having been in the startup industry for such a long time, I've realized that product market fit is something that you know qualitatively and quantitatively when you have it. But how do you quantify it, right? I think qualitative is something that we all know better. Like people love the product, like for example, let's say Squadcast or like podcasting solutions or MacBooks and all these products that people use and love, right? It's very qualitative in the sense that, oh yeah, like I would love to use it and so on. But what are some of the quantitative ways that you can see? I think maybe one is the traction in number of users signing up over a given period of time. Like, you see some form of acceleration. I think that's one way to think about it. Another one is maybe revenue, like because paying customers is also a good signal of a product market fit. But these are all like causation metrics. But I think if I were to advise a founder early on, like what product market fit really means, it's really that with a specific niche group of customers that you are looking to serve, they find that your product has given them basically a superpower or value. That is, in my mind, what product market fit is for early startup founders. But of course, that definition changes over time, right? When a company has performed some form of product market fit, you might want to then seek product market fit in a new segment of customer base and so on. And I think that is really about how you scale, how you extend your product offerings and so on. So I think that's how I think about it today.
Yeah, I like what you said, qualitative and quantitative, which is qualitative, you know it, but quantitative is something you can measure. For me, I always like to talk about it as like, can you potentially make enough money with the way that you're growing to pay yourself?
Yeah.
You know, if you can't pay for yourself now, that's okay. But if you don't see that you can pay for yourself in 6 months at a basic salary, then you probably may not yet have a product market fit because you're hungry, you can't make rent. You know, it's probably that path that you're going.
Exactly.
What was it like, kind of like going through that process? Because, at some point, you did almost like 4 years with them, right? And so what was it like to say, okay, I'm going to start looking for the exit path on this one? Because versus keep going, for Mark Zuckerberg started in the social network. Sorry, was famous enough to get the movie Social Network when we were in 2014, 2015. And he's still at Facebook right now, right? So he's done one company for a long time. So for you, what was that like decision-making wise to keep going versus hand off?
Yeah, I think leading a startup that you kind of co-founded and you went through a lot of struggles and so on to make happen. It's definitely like almost an emotional journey, I think, for most founders. For myself at the time, I think it was a fairly emotional journey where I was very, very uncertain after that of like what to do. Personally, for me, I pack a lot of my identity with the startup, and the startup is almost like who I am, and I'm the startup, and so on, right? And I think the first order of business was to try to detach that. When you decide to leave the startup, I think you kind of, in a way, force yourself to detach from that identity. So I think that's the first thing that is a challenge for sure. And then the second thing is then finding a new purpose. Maybe it's filling the hole or whatever. It's almost like a breakup of sorts, right? And you have to try to find that balance and find that new purpose. And I think for me, I was pretty fortunate that one of the startups that was actually in the same accelerator that I was in Hawaii, the founder reached out to me and said, hey, I'd love to work with you in the blockchain and crypto industry. We are doing this interesting project. Would you like to be a part of it? And I think that's kind of how I found my next item. And at the time, I had a lot of friends around me who were very, very fascinated by blockchain and crypto. And we just started talking, and I was learning, absorbing, taking everything in this new industry. And I think that new opportunity as well helped me along in a way. Yeah.
Yeah. So what was it like entering blockchain at the time? Because, I remember reading about it, all the way back in undergrad. And I was just like, this is, as an economist, this is not fiat currency, And so I was like, I think for a long time I've been bearish on the store of value. And I always forget about the fundamental store of values. If everybody believes a store of value, it's a store of value. So that's the coin dynamic that was kind of like blowing my mind. But then there's a big part of it, which was everyone has been saying for a while, it's actually the blockchain actually that's much more really thoughtful as well in terms of what it allows and enables, right? But it took a long time for me to even kind of wrap my heads around it. And what was it like for you wrapping your head around like, this is something that is a vertical that is something I want to put serious time, energy, career into, right? Yeah.
Yeah, I think my first foray into blockchain and crypto actually was for a very functional need of mine, right? To share a very, very personal story as well. Like I think around the time when I exited my startup, I got married to my amazing wife. And I guess like once you get married, you feel a lot more responsible about your life and about your family, about your purpose in work and so on. There was a functional need of mine to try to, I guess, participate in an industry that is on the rise. And I think it was in 2017, sometime in June and July, the initial coin offering wave was like super popular. There were a lot of coins that were doing really, really well. And I think there was a functional need of mine to try to like, I guess make more money. I guess greed is a more like, I guess like way to describe it at the time. And I think what then happened was once I started diving into the industry, I started understanding more about the functional purposes of like, for example, cryptocurrencies, about the blockchain technology, about the different ways that you can issue like new mechanisms, fundraise and so on. I think it became very, very interesting. And then I started to develop more of an aspirational sort of interest in the industry, right? From the functional layer to the aspirational layer, where I was like, okay, what do we mean if we were to govern a company not using the Company Act, but using, let's say, a decentralized autonomous organization. What we mean is, let's say, we don't go to Sand Hill Road and bang on the doors of VCs and we have an initial coin offering mechanism. Right? What we mean is, like, for example, countries today don't use their fiat currencies and actually start using digital currencies. Right? What would that mean? It became a lot more aspirational after, and I think that's really what helped me to stay in the industry through the bears and the bulls in this industry.
Yeah, I think there's a good way to describe the bears and the bulls because people have been predicting the collapse of crypto for a long time and everyone's been predicting the ascendance of crypto for a long time as well. And what's interesting is that you not only obviously joined your first blockchain company, but then you keep going. What was it that made you say, like, I want to keep going after my first job in this blockchain space?
I think for me, what I think really kept me going, aside from the aspirational ethos that I started to develop, was really the people that I met in the industry. So I was pretty fortunate to meet some really, really like early founders in the space. The founder of CoinMarketCap, the founder of CoinHaku, the founder of EtherScan, CoinGecko, and so on. The list goes on. After interacting with a lot of these founders and team members and stuff, maybe it's a part of social proof, maybe it's a part of like, just like interest in the industry. It became a lot more entrenched in me that, hey, this is the industry that I want to contribute in and, develop solutions. What I've also noticed, having worked at, so many different, very retail focused, in this industry, we have a burden, as practitioners in the industry to protect the user and to help users with the best kind of tools and information possible. I think in an industry where, we do not have direct government or, regulations of sorts, we really need to try to self-regulate and, essentially have practitioners in the industry that have the right ideas and ideals for the users. And I think that's really one of the my core missions right now, to try to focus on that as any other external factors, influence me.
Yeah, I think that's really important. And there you are, obviously this is where you start, getting hashtag capital, which is acquired by crypto audiences and CoinMarketCap. And after that, you join Coinbase after that. So there's a lot of interesting dynamics where you're kind of like going through that sequence of joining different crypto companies in different roles, right? So what was that like? This is where it's interesting because you've done obviously the founder role, and then now you're like also doing what I call like executive and product roles. So what's it like, the difference between like those two, founder versus operator?
The main difference between the founder hat that I used to wear and the more management hat that I wore again at CoinMarketCap and the product hat that I wear at Coinbase today is quite nuanced. So the founder hat that I used to wear at Hashtag Capital and Crypto Audiences is more of where, as a regular startup, try to find product market fit for your company for different industries, right? For example, Hashtag Capital was a quantitative trading fund. Our product market fit was, can we actually make more BTC using BTC, right? Using our trading strategy. So that was like the product market fit of that. And then for Crypto Audiences, it was an advertising network. So how do you provide value for customers and so on, right? So finding product market fit in those is really important. And then once you have found that, I call it the value hypothesis, right? The value to customers. Then you have to solve the growth hypothesis, which is how do you scale? Can you scale to a certain AUM, for example, for a fund? Can you scale to a number of customers, for example, for crypto audiences? And then the third one is monetization. I mean, somewhere along the way, you also have to figure out how to make money. For a fund, it's a bit more straightforward. For advertising networks, more straightforward. But maybe for some consumer-related apps, for example, it's less straightforward. So I think at CoinMarketCap, I was able to then put on more of a management hat, where it's also about building a team, right? So I was directly managing about 20 people, basically about half the company. And I think a lot of my time was actually spent more on making sure that everyone is productive, everyone is motivated, and everyone is great, right? And I think with the acquisition of CoinMarketCap by Binance, there's also that challenge of how do we integrate both teams, right, together in the right way, and how do we make sure that both parties feel great about the process, especially for example being the acquired company. How do we make sure that now that we are acquired into a bigger company, everyone still have their own place, right? They still have their sense of belonging in their previous teams and previous roles, but at the same time now they have a larger opportunity, maybe in a larger organization, to grow and excel in. So I think that's very, very important to manage, and I think that's a management part that I really enjoy as well. I think now at Coinbase it's a bit different, where I can put aside some of the stress of product market fit, the stress of management, and just focus on how do I deliver the best products for our retail customers, right? I think that's very, very different in a way, but obviously different challenges as well, where we have a lot of internal alignment. Given that Coinbase today is a public company with over 2,000 employees, there's a lot of internal alignment that we need to do. There's a lot of cross collaboration. There's a lot of considerations for every single product we do. So I think it becomes a very, very different challenge. It becomes more functional, which is also a skill that I'm beginning to enjoy honing. Yeah.
Do you miss being a founder?
Oh, terribly, terribly so. I terribly miss being a founder. Like yourself, I'm sure being a founder means that you have a chip on the shoulder, right? You have a point to prove, and I don't have a point to prove. I always have a point to prove. So yeah, I look forward to being back to being a founder at some point. I won't say when, but yeah.
I totally get it. But it's funny, right? Because what you just described was like, okay, these are all the factual stuff where it's better to be executive than a founder, right? Because like I said, now I get to focus on management, I get to focus on productivity, I get to focus, I don't need to worry about, some of the, and after you zoom in one day, now I'm doing product, I get to focus on technical and the best product. I don't need to worry about product market fit, management. So there's all this logical stuff about saying like, oh, you're getting more and more specialized. And then finally, the emotional part is like, oh, actually, I want to be a founder, right?
No, I honestly think that being a founder is kind of an emotional process, right? And I think you might be aware as well, Jeremy. I think I do still sort of like retain a part of that by trying to invest in early stage founders. So my wife and I, we do a bit of angel investments, in weekends. And I think that part of our, I guess, responsibility and role help us to always be in touch with early stage founders, their struggles, their success, and so on. And I think that's what I try to do these days until I become a founder again.
So what's it like to angel invest? So there's a very common journey, right? I think you and I are both we're both startup founders, we exit, now we're a bit chill, and then we start angel investing. So could you tell us more about what was it like for you to get around to making your first angel investment? Because I think a lot of people who are looking for angel investments, first-time founders, are often curious about what makes a founder later on in their life to suddenly start angel investing.
I think angel investment for me, I knew the basics of it because being a founder, you have to raise money. When you raise money for your startup, you have to understand essentially how it works. So angel investment, I think, to be honest, just really means that you're on the other side of the table, where now you're the person who is actually evaluating the startup, the team, and so on, and then giving a form of cash in exchange for equity. That itself was easy for me to understand, as in the process of what angel investment means, what founders like, what founders don't like. I definitely appreciate it a lot, being a founder myself. But I think the second part is more about team selection and deal selection and how do you filter opportunities and so on. I think that's a little bit difficult. The good thing is that crypto as an industry has a lot of angel investment opportunities. That is kind of how I first started, by angel investing in some of the crypto networks, protocols, and so on. And that was very helpful. But of course, then if we look at other industries, moving from crypto, let's say, to non-crypto industries, the dynamics change. The terms are different, maybe slightly better actually. Valuations are slightly better off, and so on. So I think there are things that you have to adjust accordingly. But it's definitely a learning process still for me. I do very candidly think that angel investment is probably one of the most expensive hobbies that you can do in life. It's definitely more expensive than buying a Lamborghini or whatever, if you do enough of it. So anyway.
I also say it's like one of the potentially worst returns hobbies you can do as well, right?
Of course. Just invest in the S&P 500. Not financial advice, but I think that's probably better.
Yeah, exactly. Because you get something, continuously, you can cash out anytime. The Lamborghini, of course, you lose a lot of value off the top, but you're a little smarter than that. So maybe you buy it used, right? Still, you can drive it every day, right? Versus, one thing I realized about angel investments is like, you're basically giving them money so that you can coach them.
I know, right? It's weird. It's really weird. Yeah, it's basically a way to work for someone by paying them money for it. It's pretty much what angel investment is.
Yeah, it is interesting, right? Because it's like we talk about the financial side, right? If you lose money, basically, even in the best case scenario, only maybe about 10% of your portfolio, 20% is going to make it. And even so, out of that, a subset of that would be the ones who actually make a return.
Yep.
And then you have this situation where you're like helping 80 to 90% of your startups go through some form of pain, right? So it's a difficult process. And of course, your capital is locked up for so many years as well. So it's a really tough, and then of course, and another thing I always help my friends as well is like, all of us founders know that there's like a 60 to 80% chance of failure at the seed round, right? Like your angel round, because a lot of them just don't find product market fit, they just fail, right? And the angels only get 20% discount for that, So you have a 60 to 80% chance of failure from point 1 to point B, but then you only have a 20% discount on, well, it used to be. Now it's I think closer to, I've seen a lot of 10% and 0% these days as well. So you're not getting much the marginal risk that you're taking on versus the actual risk.
The risk premium, right?
Whatever your risk premium. Yeah. You get 20%. Well, you used to get 20% risk premium for 80% of the risk at this stage, right? Anyway. Obviously, you've been both sides of the table and you're angel investing. How do you feel when another founder is pitching you? I always got those two hats, right? So I'm wondering, like the founder hat and the angel investor hat. So how do you think through that process?
I think for me, the mental model I like to use is more of like, I will try to help the founder to not have to say the things that I already know as a founder. For example, if the founder is trying to tell me 5-year projections of their business, I'm just like, okay, let's not talk about that because I know that that's just something that you don't know for sure. And any founder who kind of have some form of projections over there is just going to be basically taking numbers and out of thin air and kind of doing it, right? So I don't really care about any of those. And I think that has helped me a lot when communicating and talking to founders about their business. And I try to focus on maybe the tough things. For example, one of the recent calls that I had with a potential opportunity, I asked the founder who's trying to pitch for investment. So when you have 2 co-founders, when it really comes down to it, who's going to make the decision? Who's the real decision maker over here? I think some of these tough questions, just because we've gone through these situations, disagreements, and difficulties, I think it's really helpful. And I think I try to use some of these ways to filter out good opportunities from bad opportunities.
Yeah, I think it's interesting because you're talking about something which is like you're helping people go through all these dynamics and giving them advice and jumping straight to the point. Is it weird sometimes? Because for me, I feel like as a founder, you always hung out with the founders who you thought were pretty good, or you hung out, like whatever. Because now they're pitching you, right? Instead of hanging out with you where you don't really talk business. So they pitch you, and then you see this bell curve of teams. So for example, like you said, a team where they haven't figured out who's in charge is probably on the weaker side of the spectrum, just because it's such a fundamental question. Whereas you talked about it as like a high functioning team would be probably on the stronger side of the bell curve. So how do you feel about the bell curve? Was it interesting to see? How do you feel about it?
Yeah, I like to think that, to be honest, I think I don't kid myself as well. I feel like for me, if you look at the bell curve, I don't think that I'm like above average on the bell curve by a very, very far margin. Maybe people like Mark Zuckerberg or or even yourself, right, are like much higher on the, much on the other side of the bell curve than myself. It doesn't really matter in the long run. I think what happens is that I feel the thing about the bell curve is that you might be on the middle of the bell curve for, let's say, enterprise SaaS. But within that vertical, you might have this really, really small, like tiny niche, which is like either cybersecurity, blockchain, enterprise SaaS that you might be like the leader in, right? So I think what maybe matters more is like within the startup's core focus, is that team going to probably be one of the best teams to win in that space, right? And maybe even geography as well, whether it's Vietnam market, China market, Silicon Valley, or Singapore. It is all interesting, sort of things to think about. I guess to your point about, like the bell curve of like teams, I definitely do think that there's a bit of that. But at the same time, I do encourage teams though that are maybe not that special in their own perspective, to try to focus a bit more on certain niches where they can be better off, and that might actually help.
Yeah, that was a really great piece of advice that you just hit, right? Which is, you're right to say like on average, you zoom out to the max, the bell curve exists. But if your team is able to focus based on geography, based on niche, based on the vertical, and based on the approach, I think they can actually become the category leader in that dimension, right? And you break the bell curve, which is amazing advice, honestly. And I'm going to have to remember that for a lot of different folks. Because, yeah, it doesn't matter if you're not as good as Mark Zuckerberg. And please, I don't think I'm anywhere close as well. I think if you're like, a team in Indonesia and you're tackling something in the education tech space, you divide that further, you're doing something between for high school students, then it's very niche. There's no one competing there, right? Or at least there's only 1 or 2 teams, right? And then you just have to be thoughtful about how to build it in a thoughtful way to get to the next milestone. And so I think a lot of people are obviously thinking to themselves and say like, okay, how do I maximize my chances to get an angel investment? What do you think about that? What advice would you give to someone before they pitch to you or me?
That's a very, very interesting point. Just to caveat this sort of piece of feedback or advice or whatever you call it, I really think I'm one of the worst at fundraising. Like, whether it's for a startup, whether it's for a fund, it's like generally pretty bad at it. So because of that, I think I have maybe one piece of like, feedback for founders, which is number one, think of it as like a system. If you're not that good like me, build a system that works for you. And I think that system could have like maybe a 3-step process. One is intros are really important. Always try to be introduced if you can. Whether it's Silicon Valley VCs, whether it's Singapore VCs, like everybody likes to know that somebody they trust has introduced an opportunity or a person to them. The second thing, I guess, is look for investors that have some form of interest in what you do through their networks or maybe through their postings or through their portfolio investments, and just have a chat. Maybe start with a chat. And as you talk about, as you exchange notes about who you are as equal persons on a room, then maybe you'll both develop an interest in working together, right? Kind of like how you are finding a new colleague or partner or a VC. It's the same thing, basically, right? That's the thing. Just try to find common interest and alignment. I guess the third thing is just like try to focus more on where you are unique. I think maybe coming back to the previous point that we talked about, the bell curve as well. There's so many opportunities for investors to evaluate how do you stand out. I'm just trying to find maybe more unique things about yourself, your team. Like, for example, if you have developed a really novel solution that no one else has thought of before, then highlight that. So try to highlight things that are unique about you. I think these are all things that just like 3 general advice that I have for people.
Yeah, I really appreciate and agree with you about the system part as well, because fundraising is a very abnormal activity for everybody, right? Everybody has hired people, everybody has tried to figure out product, but it's very hard because nobody has really learned how to do fundraising. It's not a course they teach anywhere. And as you think about the other end of it, what advice would you give to other angel investors who are thinking about going to the market?
Yeah.
Me and my angel friends always say, like, my first advice is don't do it, because because of the financial returns you just talked about.
Yeah.
But what advice would you give to angel investors who are thinking about entering the market?
Try to develop a system. I think it's probably the most prudent approach. By developing a system, what I mean by that is a few things, right? First of all, try to set aside a budget. Like setting aside a budget when you purchase an expensive Lamborghini, or when you talk about investment strategies, try to set aside a certain percentage of a portfolio or a certain X dollar amount that you would like to sort of disperse into startups over a period of time, and set a goal for that as well. And then the second thing is maybe pick sectors or industries or areas where it's more interesting for you. For me, for example, I try to focus on the Greater China, the US, and Asia markets, and broader Asia markets. And I do occasionally look at European opportunities once in a while, but those are really rare and far in between, right? Just because of the lack of like awareness and exposure to those markets. So try to develop a market or geography or industry focus that works for you. I guess the third thing is just really think of it as a partnership, and as like finding like sort of people that you like, and try to really only do angel investments if you really want. And if you really enjoy talking to founders on a regular basis. If you don't enjoy that, just try not to do that, just because you're going to be taking away so much energy, right? If you're just there for financial returns and so on. So these are the 3 things that I would generally advise to add into your framework, but you can develop other frameworks or other systems to them.
Yeah, that's so true. I think the part where you're saying like, yeah, you have to like them at some level is actually a big one, because I've seen a lot of people just like angel invest and just make the decision where they're like, okay, this is a great idea, etc., but that, they turn to becoming passive as a result because they don't really want to hang out. But then it doesn't really work out because the founder wants more from the angel investor, and then the whole relationship isn't awesome, right? It's a drain. And like you said, it's a very expensive hobby. I guess a lot of angels, when they come in, one part of it obviously is they struggle with 3 things, right? One is finding deal flow. Then the second one is picking amongst the deal flow. And the third is actually getting in or not getting kicked out. I'm sure you've gone through the same experience. I've gone through that a few times as well. So I think you talked a lot about picking already, but let's talk about the first part, which is how do you find deal flow? And then later on, we'll talk about how to stay in. So talk about how to find deal flow.
So I guess a huge part of finding deal flow is probably extending to your network of friends and partners and colleagues and so on, and just like trying to help. One thing that people usually do is they will leave companies to take a break. Usually during that time, you should reach out because they are very, very likely to start a company, right? So maybe one immediate thing to do is like whenever your friend leaves the company to do something, reach out and ask, what are you thinking about next? And like, for example, if you have a period of uncertainty and so on, just like, offer some help and, just really try to help, because everyone goes through that. Usually I start off like that conversation by saying congratulations on leaving your job. And then like, okay, tell me more about what you're thinking about next, right? And if they already have a job offer lined up, I'm like, oh, that sucks. But if they are already thinking about a new startup opportunity, I'm like, all right, let's talk more, right? Let's be helpful. So I think that's kind of like, just like general tip of like finding new deals. The second one would be probably reaching out to hyper connectors, what I call hyper connectors. People like, for example, like Jeremy, who like knows a lot of people, who is like, really helpful to everyone. And just like anyone in your network, there's a kind of a hyper connector type. That these people are the people that you really want to work with, to find deal flow together. And I think the third one is just like, if you really have no friends and no hyper-connected friends, then there are platforms, that you can also use to start your angel list, maybe on angel list, where you can join some syndicates, invest in some syndicates and so on to tag along people as well. Those are possible ways to get started.
Yeah, I think it's really about a network, like you said, reaching out was a good tip as well. So now that I think about it, yeah, one of my investments was because of that. It was just hanging out as two founders who were chilling after our last company. And then it turns out after a while, he went off to start a startup. And I was like, one of the first few people to just have a chat.
Exactly.
And I was like, no brainer. Now that I think about it, I still haven't seen his deck.
It doesn't matter at all, right? It doesn't matter at all.
Because I'm just like, you're such a good founder. We talk about a problem. So I know what the product is, but I just never seen the deck, which is kind of embarrassing, But then you just make the investment based on the founder, right? Which is, hopefully this continues to be a cool story in 7 years, right?
Exactly. That's what you're here
Instead
for,
of
right?
a painful one, right?
Yeah, that's what you're here for.
Exactly. And then let's talk about staying in, right? Because I think there's a big problem for a lot of angels. They put out a check-in, they build out the deal flow, they see something that's interesting. And then literally, I think I saw one guy, he got shut out because he took a few days to make a decision and by then the round closed. Personally, I had, my allocation shrunk by a factor of 10, which made it like, what? So how do you think about how should angels stay in?
I think staying in is one of the most difficult things, especially in hotly contested deals. To be honest, staying in deals that don't close or like don't fail, those are really easy because like you just want more. Not being able to stay in is actually a good problem to have for angels. So if you are constantly in the situation of not staying in, please do reach out to me and we can have a chat. Means that you have really good deal flow, right? But anyway, on a serious note about staying in, I think number one, I think it's okay to not stay in and get the full allocation. For example, there was a startup that I mentored quite a little bit in 2018. They pivoted and then they created a new company in 2019. They raised a really good seed round. And I was only able to get a really, really small allocation, like maybe like 10% of what I asked for. It was not a matter to me because I was like, I want to be in rather than like, having a very, very big, amount in that startup. But I think what happened then is that along the way, I was like, able to value add to the startup over time. And then when they wanted to raise a bridge round before their A round, basically they gave like half the allocation over to myself. A way to think about it as well is that think about it as a long-term partnership. Your first check in the startup is not going to be your last check. It could be just the first of many that you follow along the way. So I think that's a mentality that I have developed as well over time.
I think that's a nice way of saying it, which is, I think the crux of it is like being helpful, right? And being aggressively helpful. Because at the end of the day, the founder is the one who makes the decision on the allocation.
Yep.
And I think the more helpful you are proactively, in general, the founders, hopefully you pick ones who are like, win-win, future-oriented, then they're more likely to help you preserve the allocation, or at least some of the allocation.
Yep.
And I think I like what you said is like, actually is a good problem to have, right? Because it shows that you're succeeding in the earlier two parts of it.
Exactly.
What's also one interesting thing about you as well is that, you've also kind of really had that span of geographies, right? Grew up in Singapore, you've been in the States, you've been in China, and obviously you had the opportunity to be part of different work cultures as well. I see you have a nice map of Singapore in the background, which is nice, right? Because oftentimes it's very much people that I do podcast interviews or video calls with. They often have a map, the same style, but of New York City in the background. Actually, now I think about it, nobody does anything for Silicon Valley or SF. But it's all New York City, the map in the background.
Yeah.
Tell us more because, you obviously have experience of countries like the whole Southeast Asia, Indonesia, Vietnam as well, like some thoughtfulness there. So tell us more about that geographic dimension that you have as a wanderer.
Sure. Yeah, I think the first thing is that, before COVID, of course, right? And even post-COVID, assuming that everyone in the world, we have herd immunity of sorts against COVID. I think travel is something that is so easy. I know I caveat it because like the last 2 years has been kind of weird, but travel is really so easy, right? So you can literally hop on a plane and go anywhere. I think what's usually stopping people from settling in a certain location to build a company is just like that lack of certainty or the lack of like, confidence or just a lot of other factors, maybe finances or maybe like the family and so on. I think for me, I was really fortunate where I have a really supportive family. So that's the first thing, like a really good, family support to be able to go to places where, and build companies where I feel is meaningful to partake in, right? For example, Silicon Valley. My girlfriend and now wife, of course, is really supportive. And we actually traveled to Silicon Valley together to build up the company Key Reply. And when I was, when I got back to Singapore, I think in 2016, I was able to go on a trip to China actually with one of Jeremy's co-founders, Conjunct Consulting, Jia Chuan. And that actually exposed me to the China market. And I was like, all right, I got to spend some time here. And I think like shortly after, within like 6 months, I joined Cobalt Wallet to start a team based in Beijing. Just basically I put on my life to Beijing as well. So I think take some risk with geography is always very, very, very interesting. And I think as Singaporeans, we tend to not do that a lot, even though we travel. Like Singaporeans are one of the people in the world who travel the most, right? Just because like how small countries, we always go to like Japan, Korea, whatever for holidays and stuff. But I definitely do not see enough of cases of like Singaporeans, starting companies in different countries just because of the lack of certainty in those areas. So I definitely encourage more people to do the same, whether it's China, whether it's Silicon Valley, like pick big markets where you can start to learn and struggle, of course, and hopefully learn something about the markets.
One interesting thing, of course, is like, networks are tough, right? Because you can move geography easily and you can set up a business. But one thing I've noticed having kind of like, ping pong a little bit between, Singapore, New York, Boston, and the Bay Area is that the network doesn't transport the same way. And especially when you're being a founder again, your network's not just a place to hang out or eat Singaporean food with, but it's also a place where you can really get a lot of deep connections and help and even like business deals done. And so the density or the tightness of that network is also quite key. So how do you think about that network? Because you and I have stayed friendly, using WhatsApp, etc. But I'm just kind of curious, how do you think about that network piece?
Yeah, network is one of those things where, like, for me personally, I do a pretty shitty job of like maintaining networks, to be honest. Some of my friends say I'm really good at it, but I think for me, I always see people who are better than me at maintaining networks across like various geographies and various like communities. But I think one thing that I've learned is, you tend to build and just spend more time with people naturally where you are located in. When I'm, let's say, for example, right now I'm located in Las Vegas or for work at Coinbase, I definitely spend a lot more of time virtually online with my colleagues, right? And that's part of the network. And the second part of the network is really like, where you're located. So I spend a lot of time with, like, for example, people I know from, maybe like my past, startups or, travels, or maybe like current hobbies, people who are living in Las Vegas, and I slowly build up a network over time with people of common interests and so on. But I think one thing that a lot of people also forget to note is keeping up and maintaining networks with people who you have spent time with before in different locations, right? Like maybe Singapore, China, and so on. And I try to do that. On the weekends, especially like this, I will always jump on the opportunity to have a call with a friend or a former colleague or a partner from a different location, just because I want to be connected and maintain that connection. So I think that's something that we can all do, maybe like as almost like a weekly goal of sorts, to try to have at least 1 or 2 calls with people that are not based in the location as you, and that's always helpful.
Amazing. Could you share with us a time where you've had to be brave to overcome adversity or challenges?
To be honest, there's so many times, especially when you're doing a startup. I think the one time that was the most memorable to me, and I almost wear it as a chip on my shoulder, and I kind of mentioned it earlier, is that when I got married to my wife in 2017, I think the both of us looked at our bank accounts and were like, shit, like the amount of money in this, whatever this is called, is like so little. How are we going to build a life together? And I think that was one of the first things that I was like, all right, we got to find a way out of this. And I think whether it's like, selling our startup, getting acquired, whether it's going to the crypto industry, whether it's like, making sound or stupid investments along the way, these are all ways to essentially try to be better. And I think a part of that is just like, being on that path. And I think that's one of the biggest checkpoints, I think, in my life, the 2017 times when we got married. The last 4 years, I think, has been like just a constant journey of like overcoming adversity in a way, whether it's like new challenges, new opportunities, new geographies, new growth, and so on. So I think I'm very, very thankful in a way. Both my wife and I were very, very thankful of what the last 4 years have been, just because of that.
Wow, thanks for that. And I totally resonate with that, right? Because I think getting married and then for me now accidentally having a kid has made me much more thoughtful about financials and everything. So unfortunately, you can't eat stock options, so or even common shares.
You might be able to tokenize that on a blockchain or something, right?
Yeah, or that's why
that for another day.
That's why all us angels get all these secondary sales. Is like all these founders who like need to like eat and buy another bedroom for the house or something like that, right?
Exactly.
Thank you so much. I would like to summarize like obviously the top 3 themes that you shared. I think the first, of course, was thank you so much for walking us through your professional journey of being a founder, being an executive, being a product leader, and I think sharing a lot of that dynamics between not only what is it like to be progressing between point A to point B, and why you decided to be a founder, what is it like to be acquired, But also, I think I really enjoyed your thoughtfulness about the trade-offs associated with it, some of the benefits of becoming an operator, but also the emotional reality of still wanting to be a founder, which was still hilarious. And I think any founder who's become acquired still has that fundamental dynamic. I think second, of course, was thank you so much for obviously the deep advice on the angel investing side, because I think it was really good advice on both sides of the table, right? So I think obviously for people who looked and want angel investments, it's nice to hear the mentality and thought process of someone who's on the other side of the table, which is honestly just for you and me, who are former founders, is just them plus 10 years. So it's not too different. And then conversely, I think it was great advice for angel investors as well to be thoughtful about how they source deals, as well as pick deals, as well as keep their allocation. And lastly, I thank you so much. I think actually for this, and it's a bit more invisible, but I think the thread about how to be thoughtful about your personal life, geography, the various trade-offs throughout the entire process. Because I always remember my mentor always being saying startups and life is a marathon. And I think I really like what you said about the thoughtfulness about being mindful of what your partner is thinking, versus the bank accounts, versus the industry changes. It's not easy to make those changes along the way. And I really enjoyed that theme of being thoughtful and deliberate and intentional about the trade-offs as much as you can, even though it's a very scary period of time for everybody. Thank you so much, Spencer, for sharing and dropping your knowledge on us.
I appreciate the questions, Jeremy, and his podcast as well. And I think you just gave a really good summary of the conversation that we had.
Thank you, Spencer. Thank you for listening to Brave. If you enjoyed this podcast, please share this episode with friends and colleagues. Sign up at www.jeremyau.com to discuss this episode with other community members in our forum. Stay well and stay brave.